The US inflation data is expected to be the big swing point of today's trade after June's surprisingly large drop in US inflation, which sparked widespread relief in the markets with this recent rally that we've seen on equities across the world. Investors are now braced for more evidence that inflation and there's a reacceleration of price growth occurring, which may pressure the Fed into certainly keeping their interest rates as high as they are, if not pushing them up further, possibly in September. Let's take a look at the numbers that we're expecting. Economists suggesting that the annual headline inflation is up by 30 basis points to 3.3% in July, which would mark the first acceleration in the headline figure in 13 months. Now, a lot of large price spikes from 2022 have rolled off the annual comparisons, so reducing inflation, especially core inflation, further in the second half of 2023 may be slower going. Broadly, this is the Fed's perspective. It accounts for why they plan to maintain interest rates at relatively high levels into 2024. Now, core CPI estimates expected to be unchanged. Now, this strips out the volatile food and energy sectors. We're looking there for a 4% reading, according to economists surveyed by Reuters. Core inflation has remained stubbornly high and will be central to the Fed's discussions when it considers raising rates in September. I want to show you what's going on with the US dollar, because this is absolutely going to be key today in what's happening. This is the dollar basket, broadly speaking, holding on to recent gains up at 102.04. The way to trade this is by using it against the euro. Now, yesterday we heard more evidence to suggest that the ECB is going to keep its foot on the accelerator for interest rates. We're going to see further interest rate rises going into the back end of this year. Second day in a row of gains for the euro against the US dollar today, bouncing off this 76.4% retracement. If you're long on this, your stop goes below the 100-period moving average, just around about the 109 level if you're long on this. Now, one of the reasons why we've got inflation continuing to creep up is because of what's happening with crude oil. Now, crude oil prices today have hit new highs not seen since the 18th of November. So broadly speaking, we're at 9-month highs for US crude. And Brent is, broadly speaking, the same sort of price action you see here, peaking up there now at levels not seen since the 27th of January for crude. So we've got money going into oil, which means that it is stoking inflation, which I think is another reason to be cautious ahead of the numbers out later on today for July CPI in the States. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.